Hey guys, it's Dave. Thanks for tuning in. Welcome back to another video. Today we're talking about Rocket Lab's Q2 results and earnings call. It's very exciting. I always love covering these earnings calls, so every single one I make sure to listen to and cover closely. I recommend all investors to follow the earnings calls of their stocks closely, especially if it's a more volatile one, something like Rocket Lab, where things can change very quickly. But before we get into the content from the earnings call, I just wanted to go over a few things. First of all, I'm now posting my Twitter link down in the description below. I hope you guys will consider clicking the link and giving me a follow. I'm really trying to find interesting people to talk to and interview about Rocket Lab in the space industry, and I think having more followers will just really give me some credibility in terms of being able to try and convince people to come on the channel. Right now, of course, I don't have very many followers, so when I tweet at somebody, they're probably just like, who is this guy? Also, we do have a Discord link down in the description below as well. Please click it if you're interested in joining our investing community, where we talk about a lot of space stocks, a lot of tech stocks, just try to figure out ways how to grow our money, work together, share ideas, and have some fun discussions. Oh, and also one more thing, this video is likely to be pretty long. Sorry about that, but I just have a lot of trouble cutting things out from these earnings calls. So many interesting things discussed, so many details. You've got the financials, you've got the Q&A is always very interesting, and then the presentation. So it's going to be a little on the long side. I hope you don't mind. What we're going to do today is first we're going to go over the presentation for the Q2 results, and then we're going to take a listen to the Q&A, and I'm going to go over some of my highlights at least and play them back for you and give you my thoughts. Then we'll go a little bit into the financials as well and discuss how we think the company is faring. By the way, guys, if you could hit that like button down below, and if you haven't already, consider subscribing. It'll really help the channel in the future. I'm going to continue to cover Rocket Lab in a lot of detail, as well as the space industry and other investing topics. All right, let's hop into the Q2 results. So first off, just a quick look at the stock, and it was a pretty wild pre-market as well as after-hours trading. So first we were up in the after-hours, then we were down a bit in the pre-market before the markets opened this morning, and then we actually opened up, and we've really just shot off like a rocket, like an electron rocket, if you will. Up 19% as we're recording this video. Of course, this is helped by the NASDAQ being up 1.5%, but definitely still a massive outperformance. So clearly the markets are liking these Q2 results. Nice to see, and congratulations to all you Rocket Lab shareholders. I know we've all done pretty well over the last month or two. Love to see it. Hope you're enjoying your returns. I've just taken a few slides from the presentation. I didn't take the full presentation because I thought it would be too long, but just kind of picked out some highlights for me. Obviously, we're looking at the most complex Rocket Lab mission yet in terms of the Lunar Capstone mission. It was a very exciting mission, really proved out their capabilities to do deep space planetary missions to asteroids, Mars, Venus, and of course the moon. I also found it extremely interesting that this was the heaviest lift to date. I didn't realize that at the time. So the sticker capability on Electron is 300 kilograms, and they've clearly surpassed that with 320. So extremely impressive mission. Congratulations to the team on that. We also had the use of their Max Flight software from their acquisition, and just all around a great mission. Congratulations to the team, and I think it shows the capabilities to come, so not just for the sake of this one mission, but what it might mean for the future of Rocket Lab. Same with Photon, obviously an extremely capable, extremely underrated spacecraft, and this really just proved out its capabilities, so I think we're going to see a lot more Photon missions in the future, allowing them to do planetary missions much cheaper than ever before. Really looking forward to these Mars and Venus missions. So we do have our first scheduled launch at the new launch pad in Virginia. This is scheduled to be in September. Right now we've had delays due to NASA certifying some flight software. NASA has advised that they are on track to be ready for September as well. So we're looking to have some Hawkeye 360 launches very soon. Really excited to see the first launch from the United States for Rocket Lab. We have substantially completed the construction on a new satellite construction facility, or production facility rather. This will help them complete the contract they were awarded by MDA to build 17 500-kilogram spacecraft buses for Globestar constellation. This is a massive contract for the team, a big win, and not only will they be able to use this facility to build those 17 spacecraft buses, they will be able to use it for future satellite production, so it'll definitely increase their capabilities in the future, allows them to vertically integrate with a lot of their different acquisitions, Solero and all the rest. They can use software from ASI, reaction wheels from Sinclair Interplanetary, of course, solar panels from Solero, and all the rest to really take another step forward in the vertical integration. Now, just a little bit of the money side of things. We had $55 million in revenue. So that exceeded guidance of $51 to $54 million, so that's a nice beat there. This represents a 36% growth over the previous quarter, as we can see. GAAP and non-GAAP gross margins were 9% and 22%. This actually slightly missed the guidance, which was for 11% and 26%. These lower margins were the result of an unfavorable product mix in terms of space systems, as well as lower overhead absorption in launch services. So a little disappointing to see them miss those gross margins. They do go into that a little bit more in the Q&A and on the call. So we'll dive into those details a bit later on, but we are looking to see those margins rise again in future quarters. So launch services GAAP gross margin was negative 12%, which is flat quarter over quarter. I would like to see some improvement on the gross margins for launch services. We should see that as the cadence increases. You know, you have a lot of the same fixed costs, but if you have more launches, there's more revenue. So really looking to see the launch cadence pick up and provide more support, as well as reusing rockets should be able to help these margins in the future. Now, the space system side of the business was better. Their gross margin was 20% versus 13% in the previous quarter. We also had some changes to the order backlog here. So the order backlog actually fell, which is different than the last couple quarters where it rose. We're now down to a backlog of $531 million. This is a decrease of $14.5 million. Now, of course, I'd love to see the backlog rise every quarter, but that's not always feasible. These contracts are very lumpy. If you sign one big contract, that really skews the numbers. So they'll discuss it a little further in the earnings call as well, but basically they're not at all concerned by the backlog dropping a little bit this quarter. They completed some big missions, and they're in talks for a lot more customers, so it's just the nature of the space business where you get these giant contracts that are often quite lumpy. Definitely a number I will be keeping an eye on, though. I don't want to see the backlog continue to fall. If it were to continue to fall, then I would start to get concerned by that, but it's something we'll be keeping an eye on in the future quarters. So revenue and gross margin year on year. I find the year on year comparison is a little rough because 2021 was a unusually rough year. They were really hit by COVID. They weren't able to launch. This number is massive, and yes, it is impressive to have 392% year-on-year revenue growth. But yeah, it's skewed to me because 2021 was so bad, so it's not quite as good as it looks. In my opinion, space systems has grown like 10x. We were at 3.7 million last year. Now we're at 36.4 million, which is great. But this driven a lot by some acquisitions. So obviously that won't continue forever. We acquired several companies, ASI, PSC, Solero was a big one. So this added a lot of revenue, but Rocket Lab's organic products also contributed about the same, which is nice. representing 144% growth. And we do like to see the organic growth from Rocket Lab's in-house products as well. But yeah, good stuff overall. We want to see the gross margin pick up again in the future. So revenue and operating expenses. The operating expenses were $38.1 million, which is slightly lower than the low end of the guidance. So that's always nice to see when the expenses come in low. And just in terms of these GAAP and non-GAAP figures we're going to talk about, non-GAAP figures do not include non-recurring or non-cash expenses. So if you have a big one-time cost, sometimes the non-GAAP figures will take that out just to give you a better idea of what the expenses are looking like going forward on a recurring basis. That's why you see the GAAP figure substantially higher than non-GAAP. So what I do like to see is that SG&A, which is really, administrative and selling and all that sort of thing, I like to see those costs being controlled and not growing substantially. So that's the side of the books that I love to have a controlled, consistent cost on, and we're seeing it hasn't actually increased much. It went down a little bit on a non-GAAP basis, and it went down as well on a GAAP basis. So there may be some factors at play there, but I do like the fact that our SG&A is staying under control, staying small. Now, of course, we do have a massive jump in our R&D, research and development spending, but that's largely driven by Neutron and Photon, which we can't expect because they are investing heavily for the future, as well as working on recovery of the Electron booster. So I actually don't mind having high R&D spending because that's money you're putting towards building out capabilities for the future and should hopefully down the line return manyfold the investment. So kind of like to see these numbers overall. The R&D spending was a little bit higher than I expected, but I'm okay with it because we're investing in the future here. Now we have year-on-year operating expenses. As I said, not the best comparison because 2021 was an odd year, but we do have a big jump here in terms of spending, of course. And then we have ending cash flow and key cash flow metrics. I think this is important to keep an eye on. So we're now down to $546 million in cash and cash equivalents on the balance sheet. I'm comfortable with it, but I do want to keep an eye on it. We are looking like we're going to burn cash for the next year or two. Probably profitability will hit maybe 2024 is what we're looking like. So we need to make sure this will reach our, when we turn profitable, and we don't want to go too crazy with the spending just to make sure we're safe. You never know if some disaster might happen. Maybe a Neutron blows up on the pad and they have to do a giant investigation. It delays things even further. You never know. So I do like to keep this cash cushion relatively high, and there's a lot of talk of acquisitions. So on the one hand, I like that, but on the other hand, I don't want the cash cushion to drop too much. We saw that in Q1, we consumed $83 million. This was driven a lot by acquisitions and investing activities. Whereas Q2, much lower here, we're down at $61 million, which is nice to see, but higher operating expenses. So that's the trade-off there. So if we're burning about $60 million a quarter right now, you can multiply that by 4 and trying to figure out how long this cash will last. It should last long enough, but you do want to be careful, I think, with that, and definitely keep an eye on it, which I will do in the future for sure. Financial outlook, just talking about Q3, what we're expecting. So we're expecting revenue to range between 60 to 63 million. This quarter, if you remember, was 55.5 million. So that's a nice little increase. Obviously, it's not massive, but you can't have every quarter growing by 100%. It's not feasible. So I'm pretty happy with this number. Hopefully they hit it. And a lot of companies will sometimes err on the low end just because they'd prefer to beat on their guidance as opposed to miss. So you never know. They could beat this number if they're sandbagging it a little bit. Space Systems, 37 to 40 million, and they're planning for 3 launches. We've already had 2 launches this quarter, so they're thinking 1 launch in the remainder of the quarter. A little on the low end. I'd like to see launch pick up, that's for sure, but Space Systems I'm pretty happy with overall. They're expecting gross margins to improve a little bit as they get a more favorable product mix. This previous quarter, they had some lower margin products from Solero and other space system side of the business, kind of dragging on the margins a little bit. They're expecting operating expenses to be 41 to 43 million, and non-GAAP operating expenses 27 to 29 million. And of course, adjusted EBITDA loss of 8 million to 12 million. Some people don't like to look at adjusted because it takes out a lot of things, but yeah, that's what it is right now. And then we have a lot of exciting conferences coming up. I'm going to be sure to listen to all of them and cover them. I'm actually becoming more and more interested in listening to what Adam Spice has to say, the CFO. I know a lot of people love Peter Beck, and so do I. But Adam Spice's comments are very interesting, and he really dives deep on the financial side of things, which is really helpful as an investor when you're trying to make your models and figure out how much you're willing to pay for a company. So I'm definitely going to listen to all of these. Hopefully you can come back and hear what I think. So now I just wanted to dive a little bit into some of the charts from Hypercharts. I love this website, by the way. Check it out if you haven't, although they are migrating to a new platform soon. But it is nice to see revenue continuing to rise at a steady rate. However, spending and operating income is also going down, and spending is going up. Now, this isn't unexpected because, we're working a lot on Neutron, but I'll definitely start to feel a lot more confident when we get the operating income moving in the right direction as well. Operating expenses, again, just another look. The SG&A is being controlled pretty well, I think. That's in yellow. We do have increases in the red R and D, which I said I am okay with because we're working on new products. Now, let's jump over to the Q&A and listen to some of the comments from Peter and Adam on the conference call. Okay, so now we're just going to listen to a few recordings of what I thought were the most important parts of the Q&A section, or what I found the most interesting. We'll start off with a discussion on margins for the business.
Yeah, I think we're going to stick to our quarter by quarter guidance. I think it's, we look at margin. There are a few factors that obviously heavily influence that, and it's becoming a diverse set of factors because of the diversity of our business. But on the launch side, it's really all about it's about launch cadence. So we've definitely picked up our build rate. So we've pretty much hit our marks on how many vehicles we wanted to build in 2022, which is great. That's an important requirement. But also, as Pete mentioned earlier, it's customer readiness, making sure we get those launches off. And really, we talked before about we hit our target model for Electron from a margin perspective when we get to two or more launches per month. So we're about halfway there. And again, where we see demand in the marketplace, we're confident we're going to get there. And we think it's roughly on the same timelines that we've been communicating all along. So, we feel very good about it. Also what Pete mentioned, earlier, gave an update on the booster recovery for Electron. That's going to be a meaningful enabler of seeing some of those rapid improvements in the margin profile of the business. Because you go from building, every vehicle being expendable to having a fleet of vehicles that you refurbish and reuse. So I think that from that perspective, that's always been part of our plan. And again, the success that we saw in actually rendezvousing and capturing that rocket was an important step forward in proving that can become a reality. So I think we feel very confident in the margin profiles that we'd previously communicated, and we're making progress against those.
So yeah, that was Adam Spice, obviously, and nice to hear that he's still confident in their margin profiles. Obviously, what we really need is to get that launch cadence up to about once every 2 weeks or twice a month. That'll really help with the overall margins as a lot of our costs will stay flat and our overhead stays the same. We're operating these launch facilities regardless of how many launches we have, and also reusability will only improve margins from there as well.
Right, and on the space system, on that business, what would be some of the things that we'll see a boost there? Is it really dependent on mix?
Yeah, it's really dependent on mix. There's so many different things going on in that space systems business, from our design services contracts to the manufacturing of the satellite buses themselves, which are just really getting underway. The component businesses that we've developed internally and also the ones that we've acquired actually, kind of come out of the chute with attractive gross margins to begin with. So it's not really there's not really a scaling challenge with those businesses. I think the real important focus item for us to achieving and maintaining healthy gross margins in Space Systems is really around implementing some of the things that we know that we need to do on the Solero side of the business, because that brought with it meaningful revenue run rate that we stated when we acquired the company was in the high single-digit gross margins, and we have a path and a target to get to 30 points of gross margin for that business. And when we achieve that, balancing that with the other existing higher gross margin, it'll land us exactly where we want to be. So I think we know what we need to do. It's just a matter of time. And when we did the Solero acquisition, we said it was about a 24-month path to get from kind of where they were to where we want to go. And again, nothing is really pushing off of that view. We remain encouraged by the fact that the new business that we sign up kind of continues to come in at higher gross margins than what existed in the existing backlog when we closed the deal in January. So all the indicators are pointing in the right direction that we can achieve the margin targets that we were hoping for in Space Systems and in the launch side.
So I'm curious what exactly they're going to change with the Solero business they acquired to make the margins go from high single digits to 30%. Sounds like they're already heading in the right direction, though. There was a lot of contracts already on the books when they acquired the company that they still have to fulfill, and those contracts they're looking at a 9% or so margin, but they're already getting higher margin contracts, and in about a year and a half we're looking at some better margins for Solero, which is a big chunk of the Space Systems side of the business. Now let's hear a little bit about how they're thinking about demand and competitors in the space.
Adding more launches to the manifest, whether it's a little bit later this year or as we head into 2023. I think some of the pretty clear failures and pretty significant delays from our aspirational launch competitors on the small launch side are really creating opportunities for payloads to come our way, right? So I think that we've witnessed a bit of we've seen scenarios where the customers are trying to play almost a game of chicken, where they're wanting to take advantage of some lower launch prices being offered to them based on some either desperation or people who are just really early in the game and trying to build commitment to their platform. But when they don't execute, either because their rockets fail or their programs continue to have push-outs, and the customer ultimately gets nervous about keeping their payloads manifest on those rockets, those will start coming our way, I believe. So I think that as time, we've always said that at the end of the day, you actually have to deliver a working product, and we've been able to do that while many others have faltered. And so as that faltering becomes more evident, I think it just pushes these kind of payloads that we're kind of hoping to take advantage of bargain basement kind of introductory pricing to a more reliable platform such as ours. So I think it's kind of hard to predict when we'll see kind of a more meaningful kind of effect from that, but I think it's likely.
Just talking about demand for the Electron there. So I think we all know what competitor he was talking about in terms of struggling and having issues. Astra, obviously. So he thinks they may get some customers out of Astra who have now canceled their Rocket 3.3, and perhaps a few other small players that have struggled. We'll see more customers come our way because of that. Now let's listen to a discussion on mergers and acquisitions.
Yeah, I mean, we like to keep kind of half a dozen to a dozen, companies in the chute. What I will say is that we haven't seen the valuations of those private companies, come in line with probably the public market. There seems to be a bit of hysteresis there. So, we're certainly not going to pay over the odds for anything there. But we continue a very active M&A strategy. There's a few things that we would like to add to the quiver, but we're being very disciplined about it in the current market.
So clearly they're open to new mergers and acquisitions, but as I said previously, I do hope they're careful with their balance sheet and their war chest, as it were, in terms of the amount of money they have in the bank. Perhaps if they make some of these deals in terms of stock only, that would be a little bit safer. I really just prefer to play on the side of caution, although so far a lot of these acquisitions have worked out quite well for them, so I'm sure they'll be smart about it in the future as well. Next up, we have discussion on the Neutron rocket and contract timelines.
Yeah, what I'd say there, Edison, is typically we don't sign contracts that are kind of fluffy. So if someone wants for example, to secure an Electron launch, it's a 10% non-refundable deposit down before we'll engage. So there's kind of two sides to this equation. Is that we need to determine who is going to be the best partner, especially when they're looking to consume a tremendous amount of launch from us. And the customer also has to be willing to make that investment into launch. And the more real the customer is, the more real they expect a launch vehicle to look. And the less real a launch vehicle is, the less real a contract is and looks. There's no formal commitment. There's no cash paid. So our focus is really on working with all of those customers, determining which one is going to actually be at the pad, and those customers in turn are looking at us and looking to see development milestones, and they're asking us the same question: was this vehicle going to be at the pad when you say it's going to be? And all the rubber hits the road when money exchanges hands at that point.
Yeah, I like this clip. I found it very interesting. Some people in the Discord channel have been talking about how where's the contracts for the Neutron and getting a little nervous about that. We've already got some other contracts for up-and-coming rockets, but why doesn't the Neutron have any? And I think if you look at it, you've got a customer like, let's look at OneWeb. We all know they've had a lot of struggles. They signed a contract with Virgin Orbit, which didn't end up working out, and there were no launches for their satellites on Virgin Orbit. They signed a contract with Roscosmos from Russia. That obviously didn't work out either, and now they've kind of burned their bridges there. So a lot of these contracts that get signed, it doesn't necessarily make them real, and I think the less serious the customer is, then the more they're likely to go with a rocket that's needs a lot of work and is not going to be ready. So OneWeb is now signed with Relativity, and we know their Terran R still has a lot of work to be done. They've never made it to orbit before. Not saying they won't. It sounds like a very interesting rocket, but that's not how Rocket Lab operates. They want to make sure that they'll be ready to go and have customers who are going to be ready at the right time. So I found this clip in particular to be very comforting in terms of demand for the Neutron is there. They just want to make sure everything will be ready before they start making these contracts. Let's hear about Neutron customers now.
And there's two elements to that. One is when is the company that's looking to acquire the launch, ready to commit to significant financial outlay to do so. Look, we could sign as many MOUs and non-financial transactional contracts for Neutron as you wish, but it's kind of not the way we operate. Any contract that you see with Rocket Lab, like, it's a real contract and there's money down. So we could press release some fluffy contracts, but that's not really not really our style or being real. And part of it comes down to is when is the customer willing to commit capital to secure it, and also as I mentioned before is like who's going to actually be on the pad. And I'm not too worried at the moment, Kevin, about that. I mean, we've got work ahead of us to deliver the vehicle, and our customers have got work ahead of them to keep their constellations on track and on schedule. And the one thing is an absolute fact is that launch is especially around the time that Neutron comes to market, is an absolute rarity. So we can afford to be fussy, and others have lots of aspirations and not so much execution history. We're very much of the opinion that we will execute, and we'll watch our customers execute, and then the people that execute will come together, and that will be that.
I think that's the best way of putting it, really. The people that execute will come together. The people that are not executing and are looking out, 5 years into the future, they may sign a big contract, have a nice press release, they'll get some nice press, But at the end of the day, Rocket Lab's going to execute, and they're going to get customers when they have assurance that the rocket will be ready and the payload will be ready as well. Next up, we're going to hear about Neutron demand and also comments on Russia and Roscosmos.
Well, I mean, it's only going one way. There was enough pressure on launch demand as it was for, I think we've talked about this in that sort of 2024 to 2027 timeframe. You have a tremendous number of mega constellations coming to market, all requiring launch, and there's a massive launch deficit in that period of time. And I think Russia was either the second or the third largest launch provider by volume from the market, and all of that launch has got to go somewhere. We also see launch becoming, acquired fairly rapidly. Programs like the Amazon Kuiper program that have consumed, basically all the remaining launch capacity on a number of vehicles. Really, it presents a tremendous opportunity for us and Neutron, and we're being very, very selective with respect to who we partner with on that one, because a number of customers aren't looking for one or two launches; they're looking to acquire years of Neutron's launch abilities, and we're just being very conservative about who we provide that to, who's going to be at the pad in the right time, and who's going to be real. Those are kind of the considerations that we're making as we work with those customers.
Yeah, so all these Neutron comments are really comforting me a lot. I think it sounds like the demand for Neutron will really be there, and Russia kind of exiting the space is only helping demand. Now let's hear about the Largens on responsive space.
Yeah, and Matt, I think following on Steve's point there, on the revenue side, what we've seen is every year we seem to have customers that come with short-term launch needs, and it's a little bit different with this U.S. government responsive launch because that's much more planned and coordinated. But if you kind of take the range of kind of a mix of kind of commercial and government customers who are either have planned responsive launch requirements, or commercial customers that show up with a very defined short-term launch window that they need to hit, prices have been, on average, probably 15 to 30% higher than our sticker price. So that kind of gives you a bit of an example of what the premium kind of looks like for this kind of responsive type of capability. And our sticker price, again, being, call it, $7.5 million is kind of what we advertise a baseline Electron launch to be. On the cost side of things, as Pete mentioned, one of the valuable characteristics of being so vertically integrated, and in fact owning our own launch facility in New Zealand, is the fact that most of what we do is fixed, right? Fixed costs. So the incremental cost of doing a responsive launch is really nothing different than a well planned out manifested launch that's out 6-12 months from now. So I think it's really all beneficial to margin because you're getting a significant uptick in average selling price, and your cost of goods sold, including your near-term kind of launch period costs, are not really affected by it. So it's all goodness.
So I think that's brand new information. I don't think I've heard that anywhere else before. I was kind of wondering about that. Like, how much extra money are they making off these responsive launch contracts where they get short notice and they really need to get something to orbit quickly? Sounds like the answer is 15 to 30%, and that all flows to the profit line because their costs are pretty fixed in terms of whether the launch happens quickly or is planned for the long term. So the responsive launch program is definitely helpful for the bottom line, and I love to hear it. Next, we're going to talk a little bit about the recently returned from orbit booster that took a quick swim in the ocean.
Yeah, hey, Justin. I wouldn't say any surprises. I mean, we were very happy with the condition that it was, even though we dunked it in the water. All of the areas that typically see the most amount of load and work, and the areas that we've been iterating on look really successful. And we have a battery program which is just about wrapped up, which will enable 10 recharges of the batteries, which is the largest single element that we were going to have to replace from the launch vehicle. So that program is just wrapping up. So it's all kind of coming together nicely. I think what was not so much surprising, but very gratifying was that, the first time we attempted to actually do this with a helicopter, with a brand new helicopter and a brand new process, we pulled it off. And rendezvousing in the middle of the Pacific Ocean was something that's been traveling at 7 times the speed of sound on a ballistic trajectory, and rendezvousing and doing all that. It was very gratifying to see that all that analysis work and effort paid off, and this is going to be a viable system for us. So that was a great point to reach.
Nice to hear the booster was in good condition, no unexpected surprises, and they were actually previously going to have to replace batteries as a part of this reusability program, but now they've figured out that they can recharge them up to 10 times, and that'll also save money and improve margins as well. Final clip here today is on the margins on the space system side of the business.
Yeah, I think we've always been consistent in talking about kind of the low to mid 50s. So there are certainly elements of that business that are 60 points plus, but really when you look at it on a consolidated space systems basis, low to mid 50s is where we've kind of set the bar.
So I think low to mid 50s is a great margin. Great gross margin. Clearly, Solera will be dragging it down as they're targeting about 30% margins on that line, but then they'll have other items for sale that will actually be well above 50% to bring that average up to the 50% range, which is great, and I am looking forward to seeing them hit those milestones. So long story short, we had a beat on revenue and we had a miss on margins. Now, overall, I think it's a good quarter. I'm pretty happy with it. I'm probably not as happy with it as the overall market seems to be, with the stock up almost 20%. So I'm not going to sit here and kind of hype this quarter up to the moon. I think it was good. I hope we can get our margins a little higher up, get our costs under control. But overall, I am happy with it, and I'm definitely going to continue to hold my Rocket Lab shares going forward. I have full confidence in Peter and Adam and the team. I think they're really smart and doing a really good job. Can't wait to see the Neutron launch. Can't wait to see our Q3 and Q4 numbers. We did get some guidance, so we're looking at a modest increase to revenue in Q3, and margins should be improving as our spending is also going to ramp up for Neutron even more, though. And our cash cushion sits at around $550 million. Let me know down in the comments below, what did you think of the quarter? Did you think it was good? Do you think this move in the price is justified in the stock markets? What in particular do you think is causing this move? Is it the revenue beat that everyone is so excited about? Something that was said during the Q&A? What exactly is causing the big move? And how do you feel about it? Let me know down in the comments below. That's going to be it for today, guys. Thanks as always for tuning in. I'll be back soon with another Rocket Lab video, and until then, see you next time. Bye.